What's up? Welcome back to Table of Entrepreneurs. I just want to talk to y'all on a part two, essentially, of fighting the stock market. So listen, right now the market is down, right? It's doing some really interesting things. And a lot of y'all may be thinking to yourself, like, especially if you just started investing recently in this last year, you've probably been accustomed to an uptick or increase in your money. You may be a little bit nervous, or you may be considering, like, taking your money out of the stock market or making emotional decisions because you don't want to lose. But remember, like I said before in the last video, you never truly lose until you take the loss, right? What I mean by that is, you take the loss means that you're taking your money out of that stock market or out of that stock portfolio. So now, if it goes down from, $150 price to $130 price, you taking a loss of $20 because you chose to take it out. So what I want to encourage you guys is just be patient. Be patient. If you're taking a loss and you feel like, it's getting too big for you, remember, like I told y'all, man, stop loss, right? Trailing stop loss. You put those in, 5%, 10%, or whatever it is that you're comfortable with, and then roll on. Now, the problem with the trailing stop loss at a time like this, what I'm noticing is that the trailing stop loss is probably going to kick you out within the same day. I've been noticing a trend of a lot of these stocks that's dropping 5 to 10% within a day, sometimes even 14%. And in doing that, let's say you just bought it this morning, you put a 5 to 10% trailing stop loss. By the end of the day, it done dropped 10%, 8%, or whatever the case may be. So now you initially already out of that stock, and you probably lost a couple dollars depending on how many shares you had. Right now is a very important time to understand what type of investor you are, right? You could be a gambler, right? That means you're just trying to flip some money, as fast as possible, right? You're making a bunch of emotional decisions, and whichever way the wind blows, you gonna ride it, right? And you want to be very cautious of that. If you go to a casino and you win for the very first time, your very first time in a casino, that's one of the worst things that can ever happen to a person, because now you have built this anticipation that when you come back, you're gonna continuously win. And that's not necessarily the case. That's usually not how it works. So the stock market is somewhat of the same thing. So if you invest your very first investment and you make a couple $100 or $1,000 or whatever the case may be, don't feel that you need to have this attitude about you the way you want to chase that high and try to get that every single time, because I'm telling you up front, that's going to cause you to lose a lot of money. Right now is the time for patience, but right now is also a time to load up. As things start to drop and the prices keep getting down, even lower than what they've been, this is a time for you to put more money into it. I've been adding ridiculous amounts of money to my stock portfolios spread out, because of the simple fact, right now, with everything being as low as it is, I'm able to buy, with the same amount of spending volume I had before, far more shares. So than I was able to do a couple weeks ago when the market was up. Now, don't get me wrong. It feels good to win, right? It feels good that you invest into a stock, and the next thing you know, within that week, your stock jumps up 25%, 50%, sometimes 120%. Think about the fundamentals. Take your time, look into the history of the company, figure out what the revenue is, the debt ratio is, look into the financials of the company, and make sure it makes sense over the past couple of years, past maybe 5, 10 years, or whatever the case may be. Look at the history of that. And if you feel comfortable based off of what you see from the history of that company, and then understanding what that company focuses on, and look at some of the news about that company, you should be fairly okay investing in it. But if you do and it goes back, then make sure you understand it's time to hold, right? Or even depending on how much you believe in this company, do what I do and I keep averaging down.
Now, keep in mind, I'm not a financial advisor.
I'm not trying to tell y'all what to do with your money, how to use your money in the stock market, but at the same time, man, a lot of people that I've been talking to recently about investing in stocks and stuff, I'm noticing a high uptick on emotional trading. One, you could be a gambler. Number two, right, you can be a trader. Essentially, in the stock market, is a person who gets into the stock market and you're making frequent trades within a short period of time. It could be a matter of days, weeks, months, or whatever the case may be. Let's say, for example, I invest into this company. If it drops 5 to 10%, boom, I'm out of it. I'm not coming back. I'm not looking back at it. Or I'm going to jump into this company. If this company turns around and makes me 15%, I'm going to pull out the profits, or I'm going to take it all and reinvest it into something else, right? That's more along the lines of trading. The final one, what we're going to talk about, is an investor. as an investor, you really want to think right now is the time where true investors are happy. True investors love times like these because everything is on a discount. Everything is low, and because it's so low, it allows you to buy, like I said earlier, it allows you to just bulk up on the shares in these companies. Now, in doing it as an investor, you understand I don't need to watch this, what my stock is doing every day. I don't need to watch what my stock is doing within a week. I probably don't even need to watch my stock until about week 2, the end of week 2, right? Because you're now in this for a long term. Really that's irrelevant, right? An investor, if you're especially a long-term investor, people that are looking to invest and you got like a 5-year hold time. Really anything that happens within this year is irrelevant. What happens in the next year is irrelevant, right? Unless the company completely goes under or gets delisted. Delisted means it's been taken off of the exchange. But if that doesn't happen, it really don't matter. I mean, invest into something that you believe in. If you have a plan in your head that says, I'm gonna be investing for 5 years in this, then don't worry about it. Because the day-to-day changes really don't, for the long term, it's really irrelevant, okay? So as an investor, you want to pull solely away from emotional trading decisions. You can look at other things, like index funds, ETFs, stuff like that, to kind of put your money in and then kind of let it do what it does. Essentially, all that's going to do is you put it into one account. That account has holdings in other accounts, and they kind of like spread load their money to those other accounts based off of how much of a portfolio that account has within their holdings. So it really takes a lot of work and effort off of you and having to worry about it. A lot of long-term investors are great historical investors will tell you if you don't know much about investing, invest into an index fund. You really don't do nothing but just pour money into it, right? But if you look at the past 5 years or even 10 years of index funds, I was doing the research this morning, and the 5, 6, 7 that I looked at, all of them within the past 5-10 years have averaged around 115-125% increase. So even if you're looking at investing solely for something like that, then that's still growth off of your money that you won't get out of a general savings account. So again, right now is the time to invest heavily. A lot of people want to jump into it when it's up. I talked about using it as a fighting strategy. If it's running away from you or if it's full of energy, don't try to chase it down because you're going to end up losing when it comes back. So smile and be happy at times like this when the market is in the red, because that means nothing but good things for you in the future to come. So again, thank you guys for taking the time to watch this video. I just want to drop a short video to you guys today, man, and kind of put y'all up on game, man. Listen, take the time to get into the market. I'm telling you, things are getting lower and lower and lower. And I'm telling you, it's making me happy because when it turns around, it's going to turn around good. I'm glad that you guys took the time to watch this video. Please like, comment, subscribe. If you're not yet investing or you're already investing on another platform, go ahead in the description below. I have a link for WEBULL, guaranteed free stock. So you ain't got to worry about whether or not you're making money, losing money, because it ain't money that you put onto it. All you got to do is download the app, deposit $100 within the first 30 days. You don't even have to use the $100 you deposit. Just deposit it to get the free stocks, right? And that's free money being given to you based off of your efforts and willingness to want to invest. Again, start out with paper trading. Let your $100 sit within your WEBULL account. Start paper trading and kind of see how you do on paper trading. And if you're doing good on paper trading, then maybe that gives you that confidence to move forward on trading your actual money. Kind of go from there. Again, I'm not a financial advisor. I'm not telling you what to invest in, how to invest in. Write down a plan, an investing strategy, or trading plan that you have for yourself. When you want to get into the market, when you want to pull out of the market, how long you want to be in the market. And that'll help you increase your ability to be a great investor and make good returns on your money. So I appreciate you guys taking the time for coming over here to the Table of Entrepreneurs, where we understand that not only do you have a seat at the table, but the table is yours. Until next time.